In this video, I'm going to show you a very easy strategy to learn in the market that you can find every single day on New York Open to catch close to 3.5 RR to 4 RR trades. And honestly, you don't need anything more in the market. That's more than enough money that you will ever need for a lifetime. So let's get right into the video. I'm not going to make it too long. So with the charts all cleared up, let's get right into the example to show you this amazing strategy. So of course we have NASDAQ and the ES. They're one of the most traded pairs during New York Open at 9:30 New York session. So right here we have a buy side liquidity. So this on NASDAQ is already like, okay, like we might just tap into this liquidity because what do we want to do in the market? The market always wants to hit liquidity and then reject off of it. Why? Because a bunch of people are in here and they have their stop loss, take profits, so forth, whatever you want to call it. They all have orders here. So the second we jump up and hit this area, we always want to reject back down. So that's why this buy side is a very strong point to look at in the market. Not only that, we also have a buy side liquidity for ES, also known as S&P 500. But we can see we never actually tapped into it. We got close, but we didn't. So that was a little iffy there. But something to like kind of counter that iffiness, if that's even a word. Anyways, you know what I'm trying to say. We had a SMT. So SMT shows that there was a divergence in the market because Nasdaq and ES always follow each other. They're correlated assets. They always follow each other. When they don't, there's a problem. Something's gonna happen, and that's where we come in to take advantage. Not only that, we have a inverted fair value gap. Pretty much, it's a fair value gap just inverted because it was a very strong break right through. So that's beautiful. As well as ES, we have the exact same thing. So do you see how we have multiple confluences and we're just like kind of stacking them up on top of each other? It's perfect. Because now, give you an example of what's going through my mind. So first thing, buy side liquidity. That's telling me right away we're at the top of the market, we want to go down. SMT, why do I care about an SMT? SMT shows that there is a confirmation that we are looking to reject down. And most important, that shows me where I can put my stop loss. I'll explain that in a second. Also, inversion fair value gaps. This is also gives me two things. Tells me one, that we are actually rejecting downward. Two, it's an entry point. So this is already looking beautiful. Right now, before we do our little RR, risk reward, we want to take our standard deviation, which is a part of our Fibonacci tool, from the top of the SMT high all the way to the break of our inversion, which is also our entry. Now, we want to always look for a -1. We usually take profits, partial profits. -2, we take full profits. But if we do have a strong break right through this -2, as we have right here, we can hold for a -4. Maybe take some more partials at the -2, but hold for -4. So look at this. Look how beautiful this trade would actually be. So SMT, stop loss right above the top, because think about it. If we end up coming back through this inversion gap and we come up here, already doesn't look too good, but we are still holding this SMT. So there's no reason to leave the trade. You might still reject downwards. Hypothetically, say we do end up coming back up here. But if we come up and we actually break these two SMTs, then we know that it's not looking good. We're better off to get out, and it saves us the partial bigger losses that we could take in the market. So having an SMT, stop loss always goes above that. And now we want to target all the way to a -4. So as I said, entry right on the inversion fair value gap, as well as ES. This can also be a second eye for you to see if you want to take an entry. Usually on ES, you do have bigger profits, but on NASDAQ, it's always my preferred pair, but you do what you want to do. Second, it comes down to this -1. We want to see a strong rejection down, which we did see, but there's also a strong pullback because -1s are very strong for pullbacks. You are oftentimes going to have a pullback on the -1. But thankfully, we ended up coming back down, breaking through. Very strong break past this -2. And that's why we would hold all the way to that -4. So I really do hope you understand exactly what I'm trying to say in this video. just what is it? One, two, three, four simple steps to learn, and you can have a god proven strategy that's honestly so proven to work in the market. It's like icing on the cake. So I really do hope you enjoyed this video, and if you did, leave a like, subscribe. Let me know how I did. Let me know if you liked the video, what you want to see more, and yeah, have a good day.